Good morning, everyone. Good morning, everyone. Today, I want us to be on accounting grade 11. I want us to be on accounting grade 11. I want us to make a revision on accounting grade 11 for term 1. So that is that. So let us be together on this presentation from the start of it to the end of it. Let us move on and let us start right now. As I've said, we are going to be on accounting grade 11. So what we are going to be mainly looking at is a reconciliation. We are going to be on reconciliation. We're going to do activity on bank reconciliation. So we're going to look at on account activity 1 as well as activity 2. These are the activities that we're going to do today. So without wasting much time, let us be on the first activity, that is bank reconciliation. That is that. So let us first revise this multiple choice. As it says, indicate whether the following statements are true or false, and you write only true or false next to the question number 1.1 to 1.5 in the answer book. So let us attend to this multiple choice. 1.1 says a favorable balance on the bank statements is indicated as a debit. So we want to know whether it's true or it's false. So the correct answer there is false. It's false. That is false. So we are saying it's false because a favorable balance, and we are saying it's false because the bank statement, on the bank statement, a favorable balance for the business is shown on a credit because the bank owns the business money. So it's not shown or it's not indicated as a debit. So get that straight. Get that straight. So it's false. That is that. 1.2. A posted EFT receipt must be entered on the date received. A posted dated EFT electronic funds transfer received must be entered on the date received. So the answer there is false. The correct answer is false. Why is it false? It's because a post-dated EFT must only be recorded on the due date. It must be recorded on the due date, not when it is received. So that is that. 1.3, a credit card sales are entered in the DJ. We are talking about debtors journal. That is debtors journal. So even there, the answer is false. The answer is false because credit card sales are treated as cash receipts, not debtors journal. They are treated as a cash receipt. So they go into cash receipts journal, not the debtors journal. That is that. So that is that. Now we have interest credited on the bank statement will be recorded in the cash receipts journal. Interest credited on the bank statement. Interest credited on the bank statement will be recorded in the CRJ, cash receipt journal. That is true. The correct answer there is true. So we are saying this one is true. So you just write true. Why we are saying it's true? Because interest increases the bank balance. So it is recorded as a cash receipt journal. They increase what? The bank balance. 1.14. An electronic funds transfer, EFT, made by another business appearing on our bank statement is shown as a bank error in the bank reconciliation statement in the credit column. So the correct answer there is true. The correct answer there is true. The answer is true because if another business, EFT, if another business electronic funds transfer appears on our bank statement, it means the bank made a mistake. So it is treated as a bank error in the reconciliation. So that is that, good people, for activity 1. Activity 1. So now let us attend to activity 2. Activity 2. Activity 2, that is bank reconciliation. Say the information relates to Plaster Traders for April 2020. So required now, 2.1, show the entries to be recorded in the cash journals. So when you talk of cash journals, you're talking about cash payments journal as well as cash receipts journal. So now you have to get that 10 marks. 2.2, calculate the bank account balance in the ledger on 30 April 2020. That is that. Prepare now bank reconciliation statement on 30 April 2020. That is 2.3. 2.4, the last one. As internal auditor, you are not happy with the control of cash in the business. Explain 2 problems to confirm your concerns. Quote figures. Give advice on how each problem can be avoided in future. So these are the questions for activity 2. Activity 2. So we are given information. So we have information A, information B, information C. These are the informations that we have. And we also have what? These adjustments that we can see. So we are going to do this activity based on this given information. So with information A, you can see now we have information on bank reconciliation statement that is prepared on 1st March 2020. So this is the information that we are talking about, and we are going to use this information. Also, we are given note that there is a note that is given, as you can see, and we must take note of that. We must make sure that we take that into consideration. But with information B, we are to do what? Professional cash journals totals on 30 April 2024 before receiving the April bank statement via email from the bank. So these are the totals that we are given, as you can see, the totals that are given. But on information C, we are given that is information on April 2020 bank statement not recorded in the April cash journals. So these are the information for bank statement not recorded in April cash journals. Also, there is also the note that is given. So that is that. So without wasting much time, let us attend to question 2.1. 2.1, we are asked to show the entries to be recorded in cash journals. Like I've said, we are going to talk about, or we are going to discuss mainly more about cash payments and cash receipt, as we are asked to do what? Journals. So now we are to first start by, when we start, we have to start with the professional totals. So we are to start with professional totals. So now we have to start with the totals, the professional totals. Where are our professional totals before we can do? For us to do cash journals, make sure that you first start by the professional total. So here are our totals, as you can see. We have cash receipts journal total, which is 65,570, and cash payments journal, which is 64,790. So now let us start with cash receipts journal, which we are saying our total is 65,570. So that is that. So this is the total that we are talking about, that we're going to start with CRJ. The total is what? 65,570. So this is the amount that you're going to start with. So let's quickly go to our CRJ. So this is the amount that I'm talking about. We are going to start with this total before we can go to the information from the bank statement. So now let us go to the information from the bank statement now. So now we are going to come to electronic funds received from a tenant. So now we're going to do electronic funds received from a tenant. Electronic funds received from a tenant. So we're talking about EFT, which we said is received from tenant. Received from tenant. So if you can see here, there is an EFT that we received from a tenant from information C. Here is our information C. As we are told that EFT received from Ngozi, which is our tenant, which is 31,350. This must be entered in the cash receipt journal, CRJ. This affect our CRJ. Remember, we have total of what? Of 65,570. Total for CRJ. So we are also told that we received this money from our tenant. So that money must go to our church receipt journal. Church receipt journal, because we received that money. How much did we receive? We received 31,350. So these do affect what? This affect our CRJ. We also have interest received. We also have interest received, which also affect our church receipt journal. Here we are told that we received this 150. We received this much. We received this much. So we're talking about bank statement is going to shows what? Interest received of 150. So interest increases bank balance. So this is going to increase our bank balance, and we are to record this in cash received journal. Then that is that. These are the only amounts that do affect our cash received journal, which is the total as well as the money that you received from our tenant, as well as the interest. From there, now you are to get the total of this. So now you are to add them and then get what? The total. So this is where we are on our answers. Here is the money that we received from our tenant, and this is the amount for interest. We have just said this one is the total. This one is the money that you received from tenant. And this one is what? It's interest. So now we have to get the total, and our total amount is 97,170. So this is the total for our cash receipts journal. So now let us do cash payment journal. Now let us be on cash payment journal. Let us be on cash payment journal. So now we are going to do a cash payment journal, like I've said. We are done with cash receipts journal. So here now we are on CPJ. We are now on CPJ. You remember we have said the total, the professional total, which is on information B, cash payment journal, which is this one. We are first going to start with it, which is 64,790. This is our total cash payment cash payment journal. So now we are now going to attend to another transaction or any amount that is going to affect our cash payment journal. And you can see that we have a CPJ adjustment. We have CPJ adjustment. CPJ adjustment, where we are to make a correction of EFT 690. If we can look at EFT 690, which is this one. EFT 690, we're talking about this amount, 11,850. The reason why I'm saying CP adjustment is because there is a given information on the adjustment. And that given information on the adjustment says, if you can go here, note, I've said it, that the notes are very important. It says the deposit appeared on the bank statement on the 3 April 2020. EFT 690, we're talking about this one. was reflected on April bank statement on the 2nd April 2020 as 14,550. So we have to correct that. So we are going to say EFT, which is in March records, EFT 690. This is so A is equal to 11,850. But the bank statement shows what? Bank statement shows, we are saying bank statement. The bank statement shows how much? 14,550. The bank statement shows this much. We are told, here's the information that tells us that if it is 690 was reflected on the bank statement as this much, 14,550. So now we need to make what? We need to get the difference. We need to get the difference. Whereby now we're going to say 14,550 minus now 11,850. Then it will give us now 2,700. So this is the amount that you're going to enter in cash payment journal. This is the amount that you're going to enter into cash payment journal. So now we have to know again what are other transactions that do affect our cash payment journal. So now we know this one, our total, and this one, they are going to cash payment journal. So we know that. So we also have a debit order. If you can see here, we are having what we call a debit order. A debit order quick insurance. Here it is debit order quick insurance of this much. So we paid that much. So it means now we are going to have that bank paid it automatically. So we are going to have that debit order of quick insures. How much is 9,750? 9,750. So even this amount is going to go into cash payment channel. Also, we have another one that do affect our cash payment journal, where we have EFT, here it is, electronic funds, extra suite repairs to shop owners, to shop windows. So we pay this much to repair our windows. So it means now we paid, and that is a cash payment journal. So we are saying it's how much? We are having this EFT. That is EFT, whenever we're talking about X class fit of 2,975. So also we added to 2, we added to CPJ, we added to CPJ. Also, if you can look at this information again, or information C again, we have internet banking fees. We have internet banking fees of 800. So we are to add that in the cash payment journal also. This is an error whereby there is a duplication of this amount. So we are going to take only one amount. As you can see, these are the duplications of the same amounts whereby we have entered both 800s. So that is incorrect. Now we have to take only one 800, and then we are going to treat it under CPJ, where we are talking about the internet banking fees. Internet banking fees of how much? Of 800. Hope we are together on that. Also, now we are coming to another amount that can affect our CPJ, or any transaction that is going to affect our CPJ. So let us look at these informations. Let us look at these informations so that we can see which other amount do affect our CPJ. Here is another information, information F. It says deposited, that is the deposited entries in April cash receipt journal that did not agree with the bank, with the April bank statement. Like we have 27,750 on 28 April 2020, 44,000 on 29 April 2020. So it says the bank statement reflected this as 33,500. 33,500. So an investigation revealed that the cash slips added to 44,000, but only 33,000 was deposited. So the shortfall cannot be traced and this must be written off. So we are saying that we want the amount actually deposited in the bank is how much? The amount actually deposited in the bank is 33,500. So, but we are told that 44,000 on 29/22, the bank reflected this amount. So an investigation revealed that the cash slips added to 44. But the cash slips now added to as 44,000. But the only amount that was paid is this much. But on the slip, what appears is this much, 44,000. It's 44,000. So it means that there is a missing cash there. There is a missing cash here. There is a missing cash. So we are going to say 44,000 minus 33,500. And the difference is 10,500. This is a missing cash. Maybe this is the amount that this amount was stolen. Maybe this amount was stolen because now the slip showed this amount, but we have paid the amount paid is what? 33,500. So this is a loss now. This is a loss. That is why this amount is to be treated in the cash payment journal. Well, at least it was supposed to be in the cash receipt journal. But because now the business now is going to lose this much, 10,500. So once it's a loss, it means now the business is going to pay this much. That is why now we are to treat it under cash payment payment journal. So that is why I'm saying one can ask, why is it treated as a payment, this amount? Even though the business received 44,000, only 33,500 reached the bank. So the missing 10,500 is treated as a money lost or stolen, which means the business effectively paid or lost that cash. So in accounting, loss of cash is treated as a payment, Therefore, it is recorded in the cash payment journal. Hope we are together on that, good people. Hope we are together on that. So these are the only transactions that do affect our cash payment journal. So as you can see, here is how they are. Here are the answers and how they came. Remember, this was our total in the beginning. Remember, this was our total. But the 22,700, you remember, this is where we had to make a correction. That is a CPJ adjustment. Remember the correction that we made. Whereby the bank statements was showing 14,550. So we wanted the difference now. This is the difference that we came out because the bank statement on the adjustment showed this. But on the bank statement, we were having this amount. So we had to find out the difference between. So that is why we came up with that amount, if you can remember very well. But with 9,750, you remember very well that this was a debit order. That was a debit order for quick insurance. So the bank automatically paid that amount. So that's that. But with 2,975, you remember that this is where we're talking about electronic funds for repairs payment for X-class fit. But with 800, if with 800, that is the error that was making the internet banking fees. This one was for internet banking fees. So also we have to add it to CPJ. Remember that was the bank duplicated fee, but the correction happens next month. So we only record one amount. So with this 10,500, this was just what we have we just did, where we know very well that we said the actual amount that was deposited was this 23,500, but the bank slip, the slip showed this amount. So it means there was a missing figure of 10,500 and the business lost because 10,500 they are to pay it. That is why we have this amount, 10,500. So hope we are together. Hope we are together on that. Hope we know all where this amount comes from. So that is that. So now we are going to come to question 2.2. We are done with 2.1. We are done. These are the totals. Now, before we can go there, these are the total cash payment journal. These are the total cash receipts journal. Hope we understand. So now let us come to 2.2. 2.2 says calculate the bank account balance in the ledger on 30 April 2020. That is 2.2. 2.2 says we are to calculate the bank account balance in the ledger on 30 April 2020. So this is what we are asked to do. This is what we are asked to do. So we are just going to so that is that. So now we have to do what bank. We are saying we are doing what 2.2 is what the bank balance in leisure. Bank balance in leisure. So that is what we are doing. So for us to do that, we have to have what a formula, whereby we are going to say opening balance plus CRJ, which is cash receipt journal, minus CPJ, cash payment journal. So that is that. Sorry, I wanted to write a plus here. So we say it's opening balance plus CRJ cash receipt journal minus cash payment journal. So you know we have CRJ, which is equal to how much is our CRJ? That is 97,070. The one we calculated, the total cash receipt journal that we calculated. But CPJ is equal to 91,515. 91,550. So maybe one could ask, where did you get this amount? I'm talking about these totals. So that is that. So now what we are going to do now is that we are going to do our calculation. We are going to do our calculation. And we are going to first say, we are going to start with the opening balance. So our opening balance is going to be this one, the unfavorable one. This one that is here, unfavorable balance on the bank account in the ledger. Remember, we are calculating what? We are preparing what? We are calculating bank balance in the ledger. That is what we are asked. Calculate bank account balance in the ledger. So the opening balance is unfavorable balance bank in the ledger of how much? 315. It's unfavorable. So we are going to say negative 315 because we are told that is unfavorable. We are going to say negative 350 plus our CRJ, Church Receipt Journal, of how much? 97,070. 97,070 minus our church payment journal, which is 91,550. So that is that. So we are going to get 5,205. We are going to get 5,205. So as our bank. So this is the money that you're going to get. So the bank account balance is this much that we are asked to calculate. So it is debited. It is debited. So this is favorable now. It's favorable. So that is that. So this is the amount that we were asked to calculate. So we can come to our answers here. You can see here it is calculate the bank balance in the ledger. So this is our opening balance that we have talked about. This is our opening balance, which is 350. We know this is an overdraft. This is an overdraft. This is a bank overdraft. So that is negative 350 plus our church receipt journal and minus our church payment journal. And this is 5,205 website is debited. So that is that. So now let us go to another question. Let us go to another question. So 2.3 now says prepare the bank reconciliation statement on 30 April 2020. So now we are to do what? Bank reconciliation statement. This is what we are mainly going to look at. So we are going to do a bank reconciliation statement. So this is our 2.3. We are saying 2.3 now. And we are doing what? Bank reconciliation. Bank reconciliation statement. We are doing bank reconciliation statement. So that is that. So on bank reconciliation statement, you have to start with the bank statement balance. So our bank statement balance, as you can see, the information that we're given is going to be a balancing figure. So the bank statement balance is going to be a balancing figure. So that is that we are saying is going to be a balancing. It's going to be a balancing figure. So this is going to be a balancing figure. So then we have to adjust for items not recorded by bank. We are going to start with the items not recorded by bank. Let me just write it this way. I'm saying like I've said, the first amount that we have to start with is a balancing figure. So we are going to get the balancing figure after the calculations that you're going to make. So now we are going to then adjust items not recorded by a bank. I'm saying we are going to adjust. Let's just get this straight. We are going to adjust for items not yet recorded by bank. That is that. So we are going to first start by the outstanding deposit. Outstanding deposit. Outstanding deposit. Outstanding deposit. So we are going to look at the deposit on the 28th April. Deposit on 28th April. As we can see, a deposit on the 28th April. Let us just go there on 28th April. Let us go there on 28th April, and then we look at that amount, 28th April. So here we are, as we are saying, we're going to first start by the by the deposit. Let me just rub this one. So like we have said, we are going to start by the deposit. Deposit entries in the April that did not agree with the bank, that did not agree with the April bank statement. So you can see it says there 27,750 on 28 April. So these are the deposit that we have said they are not yet recorded. These are not yet recorded, like I've said. So we have said it's how much? 27,750. So recorded in your books, but not on the bank statement. So we are saying this amount that you're talking about, this 27, we are saying is recorded. It's recorded in books. In books it's recorded, but not on bank statement yet. But not on bank statement yet. Bank statement yet. So we are saying in the books it's recorded, but on the bank statement is not yet recorded. So we are going to show that amount, 27,750. So let us do like this, as you can see. So this is the amount that you're talking about. A balance as per bank statement. So that is, we are talking about deposit not on the bank statement. So this is the amount that we are talking about. This is the amount that we are talking about. So now let us come to outstanding EVTs, electronic funds transfer. So here we are talking about what? Here we're talking about outstanding deposit. So now we are talking about outstanding EVTs. Outstanding EVTs, electronic funds transfer. Outstanding EVTs. So we want what? The amounts for outstanding EVTs. So those are the amounts that are recorded in the cash payment journal, but hasn't processed them yet. They are not yet processed. In the cash payment journal, they are there. But do we have them in the bank statement? They are not yet processed. So those are the EVTs that you're talking about. So you can see here the information that we're given here on information E. Entries in the April cash payment journal, but did not appear in the April bank statement. But did not appear in the April bank statement. So we have this EVT of 88, suppliers on the 29 April of this March, 8,600, and EVT of 889 for PTC total owner for private use on 30 April of this amount, 7,300. So, like I've said, this amount that you're talking about, 8,600, 7,300. We are saying these are our outstanding EVTs. These are our outstanding EVTs. These are our outstanding EVTs. Meaning to say, we have said that they are recorded in the cash payment journal. Like it says, entries in the cash payment journal. But hasn't been processed them yet. The cash payment, they're in the cash payment, they haven't processed them yet. So we have to show them in our bank reconciliation statement, those payments. So that is where when you come here, you're going to see if it is not on the bank statement. Here they are, these amounts, 8,600 as well as 7,300. Hope we are together on that. These are the amounts that were shown in the cash payment journal, but when not yet been processed. While this, we know this one, it was shown in the cash receipt journal, but not in the bank statement, in the bank statement. That is why we have to show it here in the bank reconciliation statement. So now let us go to another calculation that we are to make. So now we are to make the bank error. Now we are to make what? The bank error. So that is that. Let us do bank error. So bank charged interest fee twice. You remember that there was where the bank charged interest fees twice. So where is that? We're saying bank charged. Let me write it. Bank charged internet fee twice. So that is error. So it means we have extra fee. It means we have extra fee of how much? We can see this is what you're talking about. This is what you're talking about. These are the fees that were duplicated. This is a duplication, as you can see. This is what? A duplication. Because you can see that the bank charged the fee twice. And it's an error, that thing. Then we have to correct that the error. So this is 800. Bank charged internet fees twice. Extra fee is what? 800. So you add it back. You add it back. So we're going to show it in our bank reconciliation statement. Here we are on our bank reconciliation. This is 800 that you're talking about. This is the money that we received, but the bank just treated it twice. So this is error on the bank statement, internet banking fees. Hope we are together on that. So now let us move on. Let us move on, good people. As you can see, after adjustment, we have this balance as per bank account. After adjustment, we have balance per bank. We have balance per bank account. Per bank account. How much was it? That is 5,205. We calculated this amount. If you remember very well that we calculated this amount, 5,205. So this is the amount that I'm talking about. You remember when we were asked to calculate the bank balance in the ledger, where we had to take the unfavorable bank, which is an overdraft, this amount, where we added with our total of cash received, and then we subtracted the cash payment. Then this is the amount that we got. So that is the amount for that is the amount that we are talking about, balance per bank account. So this is the amount that we are talking about. Then this amount we have to enter it into bank reconciliation. Under bank reconciliation. So here we are. This is debit balance as per bank account. That is 5,205. So we have to add it here. So now when adding this amount on the credit side, we are going to get 28,550. Then we're going to write 28,550 on both sides so that we can get the balancing figure. So now we're going to say 28,550 here, and then we subtract all this. We subtract all these amounts, then we'll get 7,445 as our balancing figure. As our balancing figure. Then that is how that is how this bank reconciliation is going to balance. Remember, we're not having this amount balance as per bank statement. So for us to get it, it's a balancing figure. So we are going to start from bottom. That is shows now we're going to do the negative of this, whereby we're going to subtract. So we are subtracting this amount for us to get what the balancing figure, which is 7,445. It's a balancing figure. So hope we are together on that, and then we have to move on, good people. Then we have to move on to another question. which is question 2.3. Question 2.3, you say prepare the bank reconciliation statement of 30 April. Are we 2.4? Already we did this 2.3. 2.4, sorry. We are on 2.4. 2.4 as it reads as follows. As internal auditor, you are not happy with the control of cash in the business. Then you have to explain two problems to confirm your concerns. Then you quote figures and you have to give advice on how each problem can be avoided in future. In future. So that is what we are asked. So that is 2.4. Problem 1. Remember, we are asked to do what? To explain two problems. So we have problem 1. We have problem 1. So our problem 1 is EFT recorded as. EFT recorded as 11,850. Remember we had this. As recorded as 11,850. But the actual was 14,550. Hope you still remember these amounts. Hope you still remember these amounts. This is our 11,850. The electronic funds transfer recorded this amount, but the actual amount was what? 14,550. So you still remember where we came across that amount. 14,550. This is the amount that we're talking about. So we have said EFT showed this amount. You remember very well. But the actual amount, we are told that this is where it says EFT 690 was reflected. So this is the amount that we are saying. So we're going to find the difference, you remember? We're going to find what? The difference where we're going to say 14,000, 14,550 minus 11,850. Then we're going to get what? 2,700 as our difference. As our difference. That is our problem 1. That is our problem 1. So, meaning to say, meaning payments are not checked properly. It means payments were not checked properly. If it showed this amount, but the actual amount is this. So it means payments were not properly checked. Remember, we were asked as well again to what? To do what? To explain two problems and give advice. So let us give advice on the problem 1. So the advice that we can give from problem 1 can say EFT payments must be authorized and verified with documents. So that is that. So that is the advice that we are giving. But with problem 2 now, problem 2, we have a cash deposit shortfall. Cash deposit shortfall. Cash deposit shortfall. Whereby we have seen the recorded of 44,000 recorded, which is equal to 44,000, but deposited showed 33,500, if you still remember this. So, you remember that when we were talking about this amounts, if you can still remember, this is what you're talking about. This is the 44,000 that is recorded. This is the 44,000 that was recorded, but the deposited was shown what? This amount, 33,000. So you remember we subtract that and then we get what? The shortfall. So the shortfall there was what? The shortfall, which is equal to 10,500. So that is when we say 44,000 minus 33,500. So we got this as our shortfall. So this indicates possible theft or poor control. It indicates theft or poor control. And the advice that we can give is that two employees should count and deposit cash together. So that is that. So for sure, these are the answers. This is what we are talking about. This is what we're talking about. As you can see, these are the amounts that we're talking about, whereby we say the problem one. This is a P1 problem one, whereby we've said this is our problem one, where we said if it incorrectly generated entered the cash payment journal of 60 as this much, not as this much. This is a problem. But P2, problem 2, shortfall in cash deposit. Remember, we have said this was amount 33,000 was deposited, 500 was deposited, but 44,000 documented, recorded. So this is a problem 2. And here are the advice that are given, that every EFT should be authorized by senior employee so that we avoid that error. Supporting documents, easy statement of invoice, verifying them. So these are the advices that are given. You can go through them. So thank you very much for your time. Make sure that you use this presentation as to prepare for your exams. That will help you a lot. And please share with others. Thank you very much.